Ladies and gentlemen, Kim here. Welcome to the daily update. Hope you guys had a good day trading. Today, market is down about 1.3%. There, on the S&P Nasdaq 2.5%, semiconductor 4.1%, Dow 1%, Russell 2000, transport, banks, energy, biotech, healthcare, home builders, utility, retail, emerging market, every single sectors are pretty much red today. Bitcoin up, gold, silver miners are down, dollar up, the oil down, treasury bond flat, VIX popped about 10% there. Let's stick with S&P 500 ETF. Spider! 65-minute chart here. So this is where we closed yesterday. And looks like we saw another down gap this morning, similar to what we saw just several days ago here. And with that, we are able to, the bears were able to get back below the micro-term moving average. And you can see pretty much all throughout the day, this market plunged quite heavily. I remember at one point, S&P was down as much as 3%. NASDAQ and semiconductors quite heavily, 4 to 5% or something like that. So you can see we filled that up gap from yesterday. We broke below this support, and then it filled the most of that up gap from November. However, it didn't quite fill the entirety of it. There's about 10% or so is remaining. Here, let me kind of show you. I'm gonna zoom out just real quick so I can show you guys right here so you can see. You see, this is where it closed that day, right, in mid-November. And there's a big gap right here. It didn't fully fill that gap. And it probably going to be better for the sellers if they go ahead and fill the entirety of that up gap. Because last time when the buyers, you can see here, when the buyers didn't fully fill that down gap, things got very, very hectic. And obviously the trend is down overall, so that impact is gonna be greater to the downside versus the upside, right? Because we got the momentum is, the wind is shifting, the wind is blowing to the downside, the intermediate term trend of things. But we do, it would have been better for the sellers. They fully feel that. Well, that gap wasn't filled. I wonder if that kind of filled the, a little bit of rally there on the 5th hour and 6th hour, and we recover almost half of the losses from today's session. So with that price action, as you can see, we are back above the micro-term moving average as of now. However, this market being very down gap happy right now. So if we just down gap again tomorrow morning below the micro-term, it's really not going to be a whole lot. So so many down gaps that bulls need to go above, a lot of those, and you can see that we're still below the short term and the mid term and the long term moving averages with all of these down gaps. And again, one day move is not going to solve much in this type of market. Bulls are going to need minimum like 2-3 trading sessions of follow through to make any kind of impact at this point. Minimum, they need to get above this here and reclaim that short-term moving average. Otherwise, the sentiment, we want to continue to assume that sentiment is bearish. Let's check out that oscillator. You can see oscillator has not crossed up here. We're still falling despite the fact that strong bounce on the last couple hours. So that tells us obviously the oscillator is favoring the sellers going into tomorrow. Just letting you know that if I don't know if that's gonna happen, but this is an area where you can see we have a definitive lower low here. And let's say if the oscillator kind of if we do see a follow through, at least another strong bullish say, let's just say if we do see that, you're gonna see this oscillator crossing up. And if we do see that oscillator crossing up, that's gonna have pretty strong bullish divergence in this vicinity. And with that, gap not being fully filled. However, some of the, short-term moving average, both of these down gaps, bulls really need to pull something out of their hat just to make that work. Perfect. So today's gonna be, my last day for this video for this week. Obviously, I'm gonna come back for you guys on Tuesday, but you know, I still have my mini membership going on until end of this month, the introductory offer. So quickly here, so what we've been talking about here for the mini members is that you know, this is daily chart. So when you look at the daily oscillators, is, you know, when you're looking at the, you know, 65-minute chart, you kind of see that oscillator going back and forth. What we saw is that this entire month or so, that daily oscillator's been coming down the entire time, telling us the sentiment was bearish, despite the fact that we did see some of these pops and whatnot along the way. As soon as we've had that bearish divergence right on that falling resistance right here, you can see that oscillator has been coming down this entire time. So on the 65-minute chart, you know, it looks like you know, we see some of these moves, some of these crosses, but on the daily, it's been pretty consistently bearish in the last several weeks. So if you think, and I send out email updates, video updates to mini members, if you think that that's you know, beneficial for you in your own research and analysis in the stock market, you go ahead and take advantage of the introductory offer, $99 a month and $199 a quarter. I'm gonna come back for you. We'll reassess the situation. Enjoy evening block trading tomorrow.
You have another question? Sure, I got one question for you. It's, can you deal with that? You have another question? Sure, I got one question for you. It's, can you deal with that?